welcome to Your Money, Your Call. I'm Mark McCarthy from McCarthy Markets. If you've got a question about shares, our phone lines are open. We'd love to chat to you. Please give us a call on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Joining me on the panel tonight is Gary Glover from TMS Capital. Where's Gary? There he is. And Jeremy Hook from TMS Capital. And there he is as well. Welcome to the program, and welcome, gentlemen. Well, I'll tell you what, given the poor lead-in we saw from Wall Street last night, not a bad result for the local market today, up around 1% or so. Gary, how was it for you?
Yeah, no, look, it's a big move. Probably took the market by a little bit of surprise there, but the volumes were pretty light actually today, so a bit lighter than normal. But yeah, look, it has been a bit of volatility recently, so maybe, you know, probably more the sort of just some of the stocks had probably large moves. I guess that's probably the main thing, but. Yeah, I think it's actually a pretty good market, actually. It's quite enjoyable, sort of. I like a bit of volatility, and you're seeing some of the good stocks have volatility, so it gives you a chance to hopefully come in at the lower end of some of them. So, yeah, that's... Yeah. Good.
Jeremy, I guess one of the reasons why we saw the market up today was the fact that, you know, the unemployment numbers were, let's say, a little bit better than expected, depending on how you want to sort of look at it. But I guess it still reinforces the case the RBA will probably be cutting rates in the next couple of months, whereas in the United States we've got the opposite, where the US Federal Reserve is looking to raise rates. Is that a major driver for the market at the moment?
Oh, it's certainly a factor. I mean, consumer confidence yesterday and employment data here still suggesting there's an easing bias of the RBA, and you're seeing how that's impacting on the share market, because today is a classic case. The market's been trying this week to go down, but it won't. It just runs into another wall of buying. And to us, we find the market fair value at the moment. We don't really want to buy fair value. We want to buy below fair value. And so, sort of to the point of Gary's, you know, you can find either side of fair value, a bit of movement, a bit of trading, and I think being prepared, certainly we're doing it on asset allocation style, being prepared to go to a bit more cash when we see the moves up, and then being able to be back in the market. And some of those turns do have to be tight, because I think the market is bid. So there are buyers out there for what we've got. Our paper, our shares, Aussie market is well bid, and so dips will find buyers, and I think we'll see dips over the next 3 months, but buyers will meet a lot of those dips.
Yeah.
We saw that today.
Yeah. Gary, just sticking with the theme of monetary easing, monetary tightening with the central banks around the world, I saw a great graphic on the SMH website this afternoon that showed the amount of interventions so far by central banks. And since the start of the year, there's been more than 20 banks have actually lowered rates. Is the US a little premature in raising rates, or is the market sort of getting a little ahead of themselves, thinking they're going to be raising rates too soon?
Oh, look, I think some of the measures which they originally put in place a couple of years ago about what they wanted to achieve to lift rates have already been achieved. So it's there's been holding back, making sure the economy, you know, obviously the economy's got out of the wilderness, I guess, so to speak. So all the data's pretty positive there. The biggest issue for them at the moment is probably the currency has run a bit hot, so that makes it, you know, I guess the big advantage they had, you know, probably a year ago now has probably dissipated a bit. So that does take a bit of edge off the earnings, which is obviously a boost for the Aussie market. But that's really the only negative I can see out of the US there. So I think it's only a matter of time before the US does lift rates. And if you look at rates historically, once they move, there's usually multiple moves. It's rarely you get a single move, or even two sort of moves. You normally once rates start to move up, come out of that phase there, it's normally, you know, you expect 3 or 4, bang, 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 almost 4 months in a row. So.
Yeah, but it'll be interesting to see how that pans out.
Yeah.
All right, let's go to our first caller. We've got Kerry from the Gold Coast. Kerry, you're there.
Got the star team, eh? How are you, boys?
I'm well, how are you?
Good, thanks, mate. Probably more... Oh, OK, look, DAX, German DAX, record highs every night. So, look, it's all currency-driven. You can work it out. It's not hard to work out. Euro going to parity. Nikkei... it's a bull market. Love or hate it, it's a bull market. Bottom line for Gary, MBN, we're talking about currencies, Brazilian reals collapsing, I don't know if you follow that, and these guys are getting paid US dollars and nickels, a turnaround story. A lot of volume, really ticking up. I've got it on board probably 6 cents 2 weeks ago, it's hit 12.5 today. Very strong weekly, monthly chart. Just thoughts. Thanks, boys.
Thank you, Gary. Cheers. Okay, Gary, over to you first off. MBN, Mirabella.
Yeah, look, technically it does look interesting here, because the viewers right there has been a bit of volume there. So, but there's been volume every time it has sort of come off its lows here, but just haven't really got going. So
Yeah.
it's not a stock I would be going into. A lot of risk here. I personally am staying out of the sort of mid and small cap miners here. I just don't see a future for most of that sector there. So
Yeah.
I think if you've got to be in mining, you want to be in the top tier only, personally. So look, technically it looks okay here, but I think any rally is probably going to be short-lived, personally.
Jeremy, nickel took a bit of a beating more so before iron ore and the other commodity or other aspects of the commodity complex. Is now a good time to start getting back into nickel?
Well, not really. I agree with Gary. I mean, the main drivers for nickel, global economic growth and supply and demand, not necessarily favourable. We might go through a period where nickel price recovers because I don't think there's going to be a lot of new exploration at the moment. I mean, you can own it through majors. That's the thing. You can get into nickel through majors. At the moment, I guess my basic view is that I find BHP a bit expensive at the moment. So my views on things like Mirabilla and nickel are probably unprintable. So I'm really saying, you know, I'd buy BHP at $27 to $28.
Yeah.
And Daylight second, you know, in terms of that space. So we haven't really talked resource stocks in our portfolios much at all over the last few years, and fortunate for that. I think we've still got a bit of time before that discussion turns. It might be a couple of years, probably 2 to 3.
Yeah, I think the resource stocks remain under pressure, don't they?
Yeah.
Maybe
All right.
Yeah,
Let's
well,
go to maybe 3. Yeah.
Commodity booms normally happen every 30 years, so it could be another 30 for the next one.
Okay, let's go to John from Sydney. John, are you there?
Hello there, how you going, boys?
Well, mate, how are you?
Yeah, before I go into what I was going to ask you,
Yep.
I heard you just talk about nickel.
Yep.
Reminds me of Poseidon 30 years ago.
Ah, yes, that old,
remember that?
that old chestnut.
Yep.
Poseidon and Tasman X, 1970.
I think Poseidon's still going, aren't they?
I
Some
don't
form or
know.
other.
Business, yeah.
Different business, yeah.
You remember the conflagration it was?
Yeah, absolutely.
Anyway,
yeah.
my question
Smoke
to the
and mirrors.
fellas, and also yourself, being the moderator, is Monadelphous. What do you think?
Monadelphous? Yeah, okay. Well, once again, still with the mining sector,
Yeah.
under a lot of pressure. Let's start with you, Jeremy. Monadelphous.
Well, the best of a difficult lot. Again, it's typically thought of as a mining services stock. I'd say it's one, but with a difference. And to their credit, during the back end of the mining boom, knowing that things wouldn't last forever, Monadelphous set up an infrastructure division. And that's been probably the thing that's kept them together and makes them more investable than any other in the space. I thought the result was reasonable, but again, they're fighting a very, very strong headwind there. I'd say that I'll have some interest in Monadelphous in the next year, I think.
Yep.
It may be trading in short-term interest, though, because I think it can just get caught up with a few others into a sell-down. But the basic industry trends are not favourable in mining services. Infrastructure has got a fair way to go, and I think Monadelphous needs to continue to grow and emphasise that division in their business mix going forward. The fact that they'll do that means that they do have a future.
Sure. Gary, Monadelphous has always been regarded as probably being one of the best in the mining services business. Can they survive the current sort of downturn in the resources sector, do you think?
I think they can survive there. I guess it's, I mean, in property terms, it's like having the nicest house in the worst street, you know. So look, the business will survive, no doubt about it for me. But will it be a great investment? You know, it's going to be some sort of tough times ahead here. So look, the stock can probably improve here, but it's not going to outperform, in my opinion.
Well, there's bigger picture issues, aren't there?
Yeah, look, it's you know, these sort of value points. It's interesting, but it's not compelling. Yeah.
Okay, let's go to Mel from South Australia. Mel, are you there? Hello, Mel.
Yeah.
Hi,
yeah.
fire away, mate. Sorry about that.
Just inquiring about Bellamy's. I'm
Yeah.
having a look at it now. Does it look like a growth stock to you?
Are you in this one at the moment?
No, I'm not.
Okay, let's go to Gary first off. Bellamy's, any growth prospects for Bellamy's?
I don't know the company that well myself, actually, but the share price I can see here, you've gone from 140 to 290 here since December. So 3 months has been a phenomenal move here. So maybe Hookie knows a bit more than I do. But
Yeah, Jeremy, that looks more like a specky stock rather than a growth stock. What do you think about
No,
that?
it's not specky.
No?
It's a new listing last year. It's baby infant formula.
Oh, yeah. In
sells
fact, this
into
came
the
up last
major
week. You're
chains
right.
here.
Yeah.
It's a very good company.
Yeah.
Again, yesterday put headlines in this space with the Fonterra food scare, of course, the poison scare in New Zealand. But Bellamy's is an excellent business. I can't say it's necessarily good value at the moment, but it's a very good stock. It's a profitable company. Balance sheet is good. It's got a basically sound business, and I think it's a growing business. So, Mal, I'd describe it as a growth stock. I'd love to have got that on the float. But I would say, you know, you're talking about a good stock, and I think this is again a theme in the market. Better off buying a stock of this kind a little bit more than what we might, when we break it down into numbers, think it's worth, than going and looking at some of the lesser stocks on the market. So very much do like what Bellamy's is and does, and I think it is a growth stock.
Bellamy's obviously involved with milk products, you sell baby formula, etc. China, we know, had that scare with their own baby formula a few years ago now. But given the current concern about imported goods, I think Bellamy's has got upside. And
this is where the scares actually, you know, strangely enough, provide positives for those who've got a very, you know, well-regarded product and who've got processes that people appreciate and understand. You actually become a premium product rather than imported goods and the like. So I think they're in the sweet spot, and it's a nice business.
All right. Okay. Well, it's time for a short break, but we'll be back with more after this short break. If you'd like to speak with our expert panel, please give us a call on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au.
You don't need to be a big business to get the best possible travel rates for your business. You just need to bring an expert on board. A business travel expert dedicated to saving you time and money. At Corporate Traveller, we offer 24/7 service, real savings, flexible payment options and clear reporting. And there's not even a contract to sign. Some business decisions just make good sense, don't they? Corporate Traveller. It makes sense to bring an expert on board.
Watching patterns is how we help to stop fraud in its tracks. American Express. Realise the potential.
Anton's Animal Kingdom.
Anton!
How may I help you?
Help!
Be quiet.
Silence!
If only everything was as easy as creating your website with Wix. Go to Wix.com today. It's free.
Join over 1 million Aussie households slashing their electricity costs with solar. True Value Solar's Aussie All-Rounder Package. 7 panels, 3 kilowatt upgradable inverter and 2-year service. Now selling for a best ever $16.32. Ends April 2nd. Call True Value Solar.
Nice specs, Mum. I hope they weren't expensive.
No, dear, I went to Specsavers. There's 25% off glasses if you're over 60.
I bet the lenses were expensive, though. They're those special thin ones, aren't they?
There's 25% off lenses, too. Don't worry, I'm not spending the inheritance.
Good.
I'm leaving it to Derek. 25% off one complete pair of glasses for anyone over 60. Should have gone to Specsavers.
We made smaller, more efficient, more reliable, easy to maintain printers, and we built them to last. It's incredibly satisfying, but we won't stop. We've given our customers complete peace of mind.
Why do cars matter? Because grand finals matter. Date nights matter. School drop-offs definitely matter.
I'll be back, honey.
Adventures matter. But sometimes a good night's sleep matters more. Business meetings, birthdays, and best friends. That's what matters. Allianz Insurance. Because it matters.
Formula One star Daniel Ricciardo takes us through life in the fast lane and what it would mean to take the checkered flag at Albert Park this year.
You stand up on the top step and it's all worth it.
One-on-one with one of the fastest men on 4 wheels this weekend on Sky News.
Welcome back to the Thursday night shares edition of Your Money, Your Call. We're still taking your calls, and the number to call is 1300 30 34 35, or you can email us at yourmoney@skynews.com.au. Our first call after the break is David from Perth. David, are you there?
Yeah, thanks for taking my call.
You're welcome.
I wonder if you could have the panel's view on a couple of stocks that have been heading south in the last week or so. One's Collection House, DLH, and the other's Crown Casinos, if you could.
Yep, certainly. Okay, let's start with Jeremy on Collection House and Crown Casinos. So we'll maybe start with Collection House, then we'll do Crown Casinos next.
Look, Collection House is another very good business. I think this is a good time in the cycle for stocks like Collection House. You know, I'd throw into the mix probably a couple of other ones as well, like Flexi Group looks quite interesting at the moment. And I do think Credit Corp probably my preferred in this space. But look, again, we're probably in the credit cycle just at a stage when the economy's good and these businesses will perform well. They actually have a bit more business to do on the downside in these cycles. And so I think Collection House is a good investable business. Again, my preference is for Credit Corp in the same sector.
Okay. Gary, just looking at that chart there, we can see that obviously Collection House is off its recent highs. Having said that, that looks like it's heading back towards that consolidation level between, say, 2 and 220. Scope for further upside?
Yeah, no, I actually agree with you actually there, because the thing actually is interesting is the last rally sort of rallied up in pretty light volume, and all of a sudden on the down here, there's been quite a bit of selling volume, so looks like the profit takers sort of have definitely stepped in here. So normally that means probably a bigger correction. So I think you're probably likely to see it come back to 2, maybe even 190. So just looks like it might cool off a bit here. So
okay, tread warily. Jeremy, back to you on Crown. Suffering a little bit because of Macau?
A bit of that. I mean, certainly 2014 wasn't a great year for Crown, and it trickled down. But its result in February was good, and the market received it well, and the stock bounced. It's come back a little bit more recently, but the result was good. We like Crown. Able to pick some up last year, which was great, at a good price. And again, what we like about it is it's exposed to the rising middle class in Asia, particularly China. Both the local and the offshore resorts give it some sort of effective hedge. We like the offshore earnings, particularly with the lower dollar. And we think that this is a very well-managed group, good return on equity and good growth. And we find it's relatively hard to put it in a box. It sort of gets called a gaming stock. It's really just a quality industrial that has high-quality cash flows, and we like it. Again, I think around these prices, it's a stock you can buy.
Okay. Gary, I mean, obviously Crown off a little bit because of the Macau situation. Yeah, but that should bode well for their Barangaroo investment coming forward, with the high rollers coming down here instead of going to across the harbour.
It's going to be a great project, actually. It's going to be fantastic once it gets completed for the city. But I think it's a really interesting stock, actually, technically, Crown, because that sort of 750 rally from low couple of years ago up to $18, it's pulled back. It's actually done a perfect 61.8 Fibonacci retracement, so bounced off the key level, had a nice bounce. Just starting to cool off again here. Just had a quick look, around $13 is around the 50%. So if it comes back around $13, that's probably a really good
level to get in.
Level to look at again. So the fact that the markets have bounced off those other levels before means it's probably going to start looking at these levels. So the herd's probably going to be looking around $13 to buy the stock here. So yeah, it looks interesting to me.
Okay, let's go to David from Geelong. David, are you there? Hello, David.
Question about BHP, but just before I ask that question,
I'd
just like to point out something that occurred on ComSec, a very serious error. Now, and I just wanted your generalist opinion about it. From last Friday until this Wednesday, they incorrectly listed the ex-dividend date for Woolworths.
Yeah.
Now, I know this because I actually bought shares in Woolworths on the Tuesday, and it said that the next day, that's the 11th, it was going to go ex-dividend. And it's a very, very serious error because, let's face it, Woolworths is a very popular stock. Now, when I rang them up, they admitted their error, but I'd like to know why it's taken them 5 days to correct an error, which...
should have been corrected on day one.
The week after. Now, look, I'll get you a comment about in specific on that issue because it's pretty important. But listen, on BHP, after they had that big run-up, and now they've sort of tumbled down because of a series of circumstances based on the world situation. But where do the gentlemen think BHP will be in, say, 6 months? Because it's a bit of a crystal ball job, isn't it?
It is a crystal ball job, and I think that a lot of people would be thinking the same thing, David, so that's a very good question to pose to the boys. Do you want to start with a general comment first, Gary, on the ComSec situation?
Yeah, look, I don't know the ComSec platform. I mean, I use Iris there, so oftentimes they give you kind of last year's ex-dividend dates, so there's a bit of a guidance there. And obviously, as the companies report, then they release the dates, then they get updated as to what the correct dates are. So looks like a fat finger, really, I guess, probably here. So, yeah, I can't really comment on that. So
yeah, okay. BHP?
BHP, look, I've sort of had the same view for the last 18 months, is that BHP is not going to be a growth stock here, and I think BHP is going to go back to what resource stocks were sort of post or pre the sort of China boom. I think they're just going to be sort of range-bound sort of stocks here. They're going to, you know, they're just going to be basically sort of trading these sort of upward and downward sort of bands, but really not go anywhere longer term. So I think there could be good trading stocks there, but if you're buying it for a long-term investment, I don't think it's going to get you the big returns there. So, you know, still high capex in the mining sector. So, as Wookie's saying, their value is not jumping off the page there. So, I think there could be good trading stocks for covered calls, things like that. You know, they can be quite good, but they're going to have big swings up and down. But I think probably going to be in the same place 6 months down the track.
Sure. Jeremy, Gina Reinhardt today was calling for the government to ease up on the poor miners and give them a bit of a break so they can make some more money and so she can become the more richer than she is at the moment, or more rich. Do you reckon BHP could benefit from some less government intervention?
Probably won't be a lot of votes in what Gina's saying. I think, yes, they could actually. The government intervention, if they made life a little bit easier for miners, would help. But I don't expect that'll be the front line of any industrial relations changes. The issues for BHP are they manage costs and the world sets the prices for the things they sell. So the prices for what they sell aren't going to be particularly favourable in the next couple of years, and therefore the shares aren't going to be particularly special. Now, what they're doing is most of the right things that you can and should do in that environment. You actually screw down all your suppliers. You do with all the mining services companies that you gave business to. You actually get better terms or internally do that yourself. And they're reorganising their assets into the high-growth assets, which will be retained within BHP, and demerging the South 32 assets, which are less favoured, okay? They've got more cyclical, more green or brownfield style to them, and the key assets to be held are the ones in the BHP business. So part of the answer to the question is that it will be two businesses in around 6 months' time. I would retain BHP, and I'd probably, I wait the documents to make a decision, but I'm not looking favourably to the South 32 assets. But I would say that if it was staying together, I would see the stock trading either side of $30 and being range bound, like Gary said. And I do think you can make some money because it's a good quality company. It uses capital well. It produces iron ore, you know, something with a $20 mark in front of it, a tonne, which is fantastic. So, I mean, it's the best of breed. It's a big cap. When the market's confidence about global economic growth returns, and it always wavers through here, this is a stock that moves up.
Yeah.
And yesterday it was down, what, $1.30 or something? It jumps a move.
Yeah.
Jumps are quite large, and that can be a help when you're trying to get in and out. And that might be a way to do some of your strategy through to the 2015 is a bit of trading around the edges on larger stocks like this. Sure.
And your thoughts on the ComSec debacle?
Well, it's really about ComSec. As I use the same platform Gary uses, which is Iris. That gets it right 100% of the time as far as I'm aware. The one thing I would say is that when a company does not have responsibility for its own ex-state, ASX gives that. Whether the vendor, ComSec or another, uploads it incorrectly is actually up to them. But, you know, it's the sort of thing too, I find it very hard to get wrong because a company's either announced its dividend and the following day it'll have CD, come dividend, means it hasn't paid its dividend yet, and ex-dividend will be the day when it's without the dividend. The shares always fall that day, notwithstanding other market moves.
Yeah. Well, my own 2 cents worth is that, you know, ComSec is arguably one of the best platforms in Australia, and unfortunately, if they get little things like that wrong, it will turn a lot of people off eventually. So, something they should at least be paying attention to. Let's go to Luke from Brisbane. Luke, are you there?
Yeah, g'day, Mark. Just a technical question on Ramsay. It's pulled back from $69 to $66, just wondering, is there any more downside to this?
Okay, well, let's get a look at the chart first off and go to Gary. Ramsay. Well, it's a good-looking chart. I mean, it has pulled back. Do you think it's a little bit of profit-taking?
Look, there has been a little bit here, but I mean, like this stock has been compelling so far. It's you know, we talk about you know, Monadelphous in property terms. Monadelphous is sort of like you know, owning the nicest house in probably one of the worst suburbs, like a Mount Druitt type of thing. Whereas Ramsay's like owning the nicest house in Point Piper or something. You know, one of the nicest suburbs in. You know, so you've got to be in the right sector here. So, obviously, healthcare is the best sector. This is the best stock in that sector. Just had a look here. Look, most of the corrections are probably only about $4 so far in size. So, if you just, you know, if you look at what the normal size correction is, and that's probably, if you're looking for an entry, that's probably as good as it can get. But not big entries, not big pullbacks when you consider how big the move has. So, look, there's some. It feels like there's a bit of risk here chasing this because it's obviously, you know, raced ahead here. So it'd be nice to sort of see a big correction, but so far the corrections have only been like a $4 to $5 corrections, about as big as they've been so far. So
yeah,
it might be as good as it gets.
Yeah, Luke, technically I'd say that looking at that chart, the trend is still your friend, so stick with it for the time being. We'll be back with more after this short break. If you'd like to speak with our expert panel, Gary and Jeremy, please give us a call on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au.
You are watching a man that they'll be talking about centuries from now. Touch! Pause! Engage!
Please. Technicalities.
He turns him around, stepping. He gets away!
The technique is remarkable.
They're holding their stagger early. Somebody stop him!
Just has to have a bit of a breather, I reckon.
The pain is temporary, but glory lasts forever. He's loving this. He's loving the contact.
Will it be a fairy tale?
He's going to smash it. He's going to smash it. To the Lord. Unbelievable. We have licked off leaders. That was magnificent.
Something to savour. Something to remember for the rest of your life.
The best team of the modern era. What a legend. What a champion.
Let's go again. Don't do it.
If only everything was as easy as creating your website with Wix. Go to Wix.com today. It's free.
You don't need to be a big business to get the best possible travel rates for your business. You just need to bring an expert on board. A business travel expert dedicated to saving you time and money. At Corporate Traveller, we offer 24/7 service, real savings, flexible payment options, and clear reporting. And there's not even a contract to sign. Some business decisions just make good sense, don't they? Corporate Traveller. It makes sense to bring an expert on board.
Why do cars matter? Because grand finals matter. Date nights matter. School drop-offs definitely matter. Adventures matter. But sometimes a good night's sleep matters more. Business meetings, birthdays, and best friends. That's what matters. Allianz Insurance. Because it matters.
Welcome back to the program. I'm Mark McCarthy from McCarthy Markets, and joining me on the panel tonight are Gary Glover from TMS Capital and Jeremy Hook from TMS Capital, and there's all three of us. Okay. If you have a question you'd like answered about shares, please give us a call on 1300 30 34 35, or you can call us, you can email us at yourmoney@skysnews.com.au. Let's go to our first question, and we have Scott via email writes, the recent profit result for IINet was flat due to a big increase in staff costs. Do you think the stock is now ex-growth? Yeah, interesting question. Jeremy, IINet, a bit of a market darling at the moment, or they've been getting a lot of traction. There's still further growth there?
Yeah, I do. I think there's more growth. A good return on equity, a great sector, a growing business, well managed. Possibly, though, we won't see as many mid-cap players in this space in a couple of years. I actually think this is a target.
Yeah.
IINet could well be bought out. The acquirer, possibly TPG, who are already on the register. So, no, I think it's a good stock, and I don't think... I think the share prices of both IINet, TPG and M2 Telecommunications are surprisingly jumpy at times. It's a really... I can't necessarily explain it, but that provides little opportunities to get in and sometimes get out of a stock like that. But IINet's a good stock, so I'd certainly call it a growth stock.
Yeah, Gary, I only heard the other day, actually, that, well, I won't name names, but someone said they just dumped Telstra to take on IINet. Do you think they can get more ground out of the big suppliers?
Look, I mean, Telstra got up to, what, 18 times or 8.5 times earnings, so that's getting pretty pricey there. The IINet's pretty interesting because that's probably one of the biggest corrections it's had, and that was on the back of a result which probably just come up short of expectations there. So there was a bit of market got a little bit concerned about you know, the growth, where they get the momentum going. So, but I'm with Hookie. I think it's probably an opportunity here. So it is one stock I have been keeping an eye on. I was hoping it might come back a little bit deeper. But maybe that's it. So, but you know, the good companies, you got to wait for a nice healthy correction here. So this might be it. Yeah.
Time to get on board?
Yeah, I think it's one to definitely have a look at here, so yeah.
All right, okay. Let's go to Brian from Armidale. Brian, are you there?
Yes, gents, how are you?
Thank you. How are you?
I've got two issues, actually.
Yep, sure.
One is Avio Property Group.
Yeah,
They've effected a takeover of FKP.
Yeah.
Their shares have gone up pretty well, and I wonder whether or not it's time to get out, or whether or not they've got potential to go further. And secondly, mining services. Obviously, the mining companies have still got to be served. Which is the best positioned mining services group to actually look after the mining companies as it is now in their production stage, rather than their exploration and advancement stage?
No, that's a good question. Actually, we did speak about Monadelphous earlier on, but I guess that's a different bet on the same question, isn't it? I mean, obviously, mature mines still need to be serviced. Which company is the best place for that? Who wants to go first?
Probably Monadelphous or Drill Search, I think, are probably the two. Again, I'd also point to the fact that, again, when this mining boom was ending, it was always going to be a case that there were going to be winners and losers. But those are two that are net winners, because they're hurting at the moment still somewhat, but as the business consolidates, just being there means that they'll be able to participate. I don't think, like in previous busts to mining booms, that the big resource players will bring it all in-house. You know, a lot of the businesses that have been done by mining services companies during the mining boom used to be done by the majors. They just found a way during the boom to say, well, we're going to concentrate on owning the mine and producing, and use the services we need from outside. And again, that's been a very smart move by the majors. So I'd point to those two. I guess the other one was Avio, wasn't it?
Yeah.
And on that, it's a good business. Again, FKP was the business. Avio is what it's called today, and I think it's a pretty good place to be. I don't think I'll be bailing out of it. Good recurrent earnings, retirement living, and a leader in that space. They've got, you know, good sites, good locations. Their share price has gone up, you know, a reasonable dividend, and again, I would think plays into a theme that's going to be with us for a couple of decades. You know, again, doesn't mean that Avio is one that you stick with for a long time, but I think you're still sticking with it now.
Okay. All right. Gary, first of all, this mining services, apart from, we've already spoken about Monadelphous, but apart from Monadelphous, are there any others you'd recommend in that sector?
I was thinking maybe taking a step to the left a little bit, and maybe something looking like a Downer, something in that more, you know, roads, construction, infrastructure area. So similar mining service there, but maybe in more general sector there. So you're not just in the one segment there. A bit more safety there. Dan's been a good company. Had its ups and downs depending on what cycle it's in, but it's a bit more sort of broad based there. So not hostage to being in the mining sector there. So probably prefer something like that if I was, rather than go mining services there, try and pick the eyes out of that sort of worst sector, I guess. So
sure.
That might be something to look at.
And Avio?
Look, technically it's had a good run there, so it's a little bit tired here. So, but I'll stick with Hookie there. It's probably obviously good stock, and but yeah, probably just run a bit hot here in the short term.
Okay, tread warily. All right, let's go to Michael from Sydney. Michael, are you there?
Oh, yes, thanks for taking my call.
You're welcome.
My stock is Oceana Gold, OGC.
Yep.
Just wondering what you think about, we've been having a sniff around a resource. I don't own any resources companies at the moment, so I'm looking to diversify a little bit. But I've just been having a look at it recently, and it's winding down its New Zealand operations because they're a bit expensive. Just wondering what prices would be good to pick it up. It still seems to be falling still. Just wondering if we get it maybe a little bit cheaper.
Sure. Well, I think that from my perspective, Mike's probably right, probably will pick up a little bit cheaper. That's more to do with the price of gold rather than the company itself. We saw the price of gold now back down to around $11.50. Had fell about another $8 last night. Not looking too good. There are still a lot of fundamental reasons why the price of gold could go a lot higher, but it just seems at the moment the shine's completely off the metal, and with the resurgent US dollar, it looks like it could even actually get below 1,000. Now, no one else has said that. You heard it here first. Could be wrong. Okay, Gary, let's go to you.
So you nailed it right in the head there, basically. It's the US dollar strength there makes it hard for most of the commodities. So, it's an inverse relationship there, really. So it's always existed. So it's just, look, for me, only sort of, the only sector I'm probably interested in is probably oil. I think oil's, got a stronger demand curve there. So it's always goes through these sort of ups and downs. That's the sector which, for me, the only sort of commodity I see having a real decent recovery. Most of the other commodities are going to be lukewarm at best here, so I just see they're sort of more neutral there. So, this OGC, look, it's going to bounce around like the market is bouncing around. For the traders, maybe there's something there, but for the long-term investor, it's not the place to be, personally.
Yeah. Joe, it's a saving grace for people like Oceana and a lot of gold producers, the fact that the Australian dollar is also getting weaker with the gold price at the same time the US dollar is going up. So in Aussie dollar terms, the gold price is probably, well, let's not say stable, but certainly not as going down as fast as it is against the US.
Yeah, that's right, I think, Mark. But I don't know what Oceana's costs are. I'm not familiar with the company, but I would say across the board, costs have risen. And where we were seeing a lot of producers of mid-size being able to produce for $500 to $600 an ounce, I know a lot of it is close to $1,000. Yeah. And for some of them, it's even higher. And in that environment, it just becomes such a fine margin for such a large risk. And like you, I mean, my longer-term target is below, $1,000 an ounce for gold. And so, that's why I don't want to. Even if this looks good at the moment and all of that, I really don't want to commit capital to it. And I think when you're in the position that you've stayed out of this space for a fair while, you need a very good reason to go into it. And I'm not aware of what it is. I'd be happy to be proven wrong, but I can't see the case here on the sector, the commodity or the stock. And if that's it, there's a lot of opportunities elsewhere in the market. Sure. Others that are more easy to understand and forecast.
All right. Okay, let's go to Scott from Brisbane. Scott, are you there?
Yes. I was just wondering what the panel thought about a stock called NextDC, whether they think it's a long-term proposition or not.
Okay, so I assume you're not in this one at the moment, Scott?
Yeah, I got in a couple of months ago, so I'm just wondering if I should stick with it or get out.
All right, let's go to Gary first off, and NextDC, what do you think?
Yeah, look, it's been difficult actually, apart from Technology One there. There hasn't been too many great sort of IT service sort of, IT sort of sector stocks here. So, look, technically it's had a nice sort of run there. Just I can see that just the last couple of weeks there, it's run so hot here that there has like the volume stepped up at the high here. So, the last 6 weeks it's run up on very light volume, and then bang, it's hit that 260 mark, and all of a sudden the sellers have come in pretty aggressively. So, look, might be a good stock here, but technically it tells me it might sort of cool off here a bit here. So 220 is the last high, so That's probably first support I can see there.
Jeremy, Scott didn't tell us what level he got in at, but I would say he's had a pretty good run so far. Would you suggest maybe taking some money off the table?
Look, I think so. I mean, I had a good look at it over a year ago and decided not to invest. NextDC runs data centre outlets which provide outsourcing services for major corporates, including telecommunications businesses. And what worried me most about this was that I just thought, a little bit like my comments about mining services, strangely, that the same companies that give a contract to NextDC could take it back at some stage, and the business is probably contract-driven as a result. And when it becomes favourable for somebody like Optus to take back all their data from the data centre storage that NextDC provide, what are they left with? And that's worried me. Why I looked at it was because Bevan Slattery was a director. He was the founder of Pipe Networks, which eventually sold to TPG. And so he made a fortune out of that and was obviously a very smart operator in this space. But he himself has been in and out of the stock. And again, possibly on the same grounds that it is actually a nice opportunity, but it carries some contract-related risk, I think. So that, to me, suggests when profits are available in these sorts of things, unless there's something more in the contract and business size issue that is coming, you can take a profit.
Yeah. All right. OK, we're going to take another short break, but we'll be back to answer more of your questions in just a moment. If you'd like to speak with either Gary or Jeremy, please give us a call on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au.
Only at The Good Guys. It's Kitchen Week, and we're packed full of bonus offers. Purchase a selected dishwasher to claim a bonus Jamie Oliver 56-piece cutlery set valued at $399. Available in-store and online. Only at The Good Guys.
You are watching a man that they'll be talking about centuries from now. Touch! Pause! Engage!
Please. Technicalities.
He turns him around. Stepping. He gets away. The technique is remarkable. They're holding their stagger early. Somebody stop him!
Just has to have a bit of a breather, I reckon. The pain is temporary, but glory lasts forever.
He's loving this. He's loving the contest.
Will it be a fairy tale?
He's going to smash it. He's going to smash it. To the Lord. Unbelievable. We have liftoff leaders.
That was magnificent. Something to savour. Something to remember for the rest of your life.
The best team of the modern era. What a legend. What a champion.
Anton's Animal Kingdom.
Anton!
How may I help you?
Help!
Be quiet.
Quiet!
Silence.
If only everything was as easy as creating your website with Wix. Go to Wix.com today. It's free.
Enter the fantastical world of lightness. Samsonite.
Join over 1 million Aussie households slashing their electricity costs with solar. True Value Solar's Aussie All-Rounder Package. 7 panels, 3 kilowatt upgradable inverter and 2-year service. Now selling for a best ever $16.32. Ends April 2nd. Call True Value Solar.
What's happening in property in 2015? How can you identify the areas with the greatest chance of growth? In front of a live audience, we'll be answering the questions that property investors most ask. A special Your Money, Your Call on Sky News Business.
Welcome back to Your Money, Your Call. If you've got a question about shares you'd like answered, please pick up the phone and call us on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au. Let's go to Warren from Canberra. Warren, are you there?
Okay, how are you going?
I'm well, mate. How are you?
Good, good. Can I get the panel's view, please, on two different sort of stocks?
Yeah.
One's ASX and the other is Flight Centre.
Okay, let's go to Gary first off. ASX.
Look, ASX had a rip-roaring run here. It's just great stock, great company, but pretty pricey here. So
wow, that's a big run-up.
I see strong signs of sort of selling coming in here as well. So it just tells me that stock's going to cool off. But if I wanted to buy the stock, I wouldn't buy it here. I'd probably be waiting for a bit more of a pullback here.
Do you know the reason why it's just gone up so strongly in the last couple of months?
Look, I just think obviously the equity market's been strong here. You've seen a lot more flow in terms of IPOs coming to market. So
wow.
But the run's been pretty pronounced, so it's a big move here. So just looks a bit hot here for me.
Yeah.
I have been in the stock here, but I'm out now. I'd like to buy it back quite a bit cheaper than the current price.
Yeah. Absolutely. Let's go. We'll come back to Flight Centre. Let's go to Jeremy first off. Jeremy, obviously, as you can see from that chart, there's a lot of consolidation between, or sort of around that $36 level. The run up to 42. Is it sustainable?
No, I think it'll pull back a bit, but it's good news because the stock had done very little for a fair while.
Yeah.
And before the chart, in fact, it was all low 30s. And
yeah. In fact, I'd given up watching ASX for a few years.
Yeah, a lot of us did. And, you know, it was one of our better stocks in the first few years of listing.
Yeah.
It was very, very good stock to own, you know. It did go up to $60, I think, pre-GFC and all of that. But as a stock, it's got a good business, the return on equity is high, pays a nice franked dividend, and it has some growth engines that aren't particularly well understood. But listings were key in the first half. They're going to be probably reasonably important this half. Activity is important. The reality of it, when we were quite large owners of the stock, is it was a monopoly then. It isn't now. In its key businesses, it competes. And again, as Rupert Murdoch said, everybody hates a monopoly except those who've got them. And ASX is a form of monopoly. And again, I think it's got more comfortable with that. I know right at the moment it's trying to discount its fees to win back some business from Chi-X. But its investment in Iris is paying off pretty well. That's a well-performed business that it owns a stake in. And again, I think it's a good business, but too pricey.
Yep. Okay, Gary, back to you on Flight Centre.
Yeah, Flight Centre's look not quite as dramatic there. It has had a good run here. That $32 level was a great level to be buying the stock here. So probably looking to sort of somewhere in between here. So I think it might drift back towards $38. I do like Flight Centre here, but it's just it has gone from sort of 32 to 42 pretty quickly.
Yeah.
So it might just sort of cool back here. So probably looking for something in between here. So yeah, I did like it down a bit lower here. It's just looking for another maybe a re-entry position here. But yeah, I mean, look, in terms of where the currency is as well, it's going to make tourism is one of those sectors which should get a bit of uplift here. Has been a couple of
inbound tourism.
Well, I think it's been a tough industry to be in, obviously, where the currency has been, obviously, on temporary. So now it just takes a while for those movements for the flow to come in. So I do think over the next sort of 12 to 18 months, Flight Centre can be one of the beneficiaries of the currency being where it is.
Yeah.
So it'll be more expensive to travel overseas. So we'll probably do more domestic travel.
Staycation.
And then obviously a lot of the Asian travellers will come into Australia as well. So that's they can sort of leverage off that as well. So I think it can do quite well here.
Jeremy, that last spike we can see in the share price there can't be 100% certain, but I think was that because Graham Turner was buying a couple of weeks ago? Was that right?
Really the result, and people had in their head that the lower dollar meant less outbound tourism, bad for Flight Centre's business. And the result was better than expected. It's quite a heavily shorted stock, which means it can get those spikes on good bits of news.
Bear trap.
Yeah, exactly. But it had traded down all through last year. We do like this stock. Important to understand and misunderstood, I think, is the fact it's got quite substantial offshore operations already. US, UK, parts of Europe, South America as well. So I mean, this is a business which isn't just that corner store we see in Sydney, Melbourne, Perth, Brisbane, Adelaide. It's something else. It's quite a dynamic, partly online, partly bricks and mortar business, but a high quality business. Great balance sheet, great return on equity, a good dividend, and an excellent management team with skin in the game.
Yeah.
So good business. Probably just a little dip back, and we'll be in buying pretty heavily again.
Yeah. All right. Let's go to Bryn from Sydney. Bryn, are you there?
I am, Mark. Thanks for taking my call.
You're welcome.
I'm a holder of Woodside Petroleum and Beach Energy, and I've noticed that some brokers have a sell on Woodside at the moment. I'm aware that the dividend may be coming under some pressure, but even if it pulls back to 5 cents, it's still quite a good yield. Do you see any problem with either of these stocks holding them for the medium term? Thanks.
Okay, thank you, mate. Well, Jeremy, obviously oil, similar to gold, is under pressure at the moment still. Hard to see the oil price rising too far. However, if the Australian dollar keeps falling, that's going to protect the people like Woodside and Beach Petroleum. What do you think about their scenarios going forward?
Look, I really like Woodside. It's about getting it at the right price. The thing I'd say about Woodside, it's got a very strong balance sheet, excellent cash flow. It pays a very good dividend. Yes, that dividend may not be sustained in the next little while, but it'll still be a very high yielder. And the thing I like most about any company I invest in is having a management team which is prepared to walk away from deals and have some fiscal discipline. Now, when Woodside walked away from Leviathan in the back half of last year, that was the Israeli oil project that they didn't go ahead with. They turned their back on about a $2 billion commitment, which I'm almost certain, though the market trashed them on the outcome of walking away from it, if they had done it, they would be instantly regretting it. And I thought that required an amount of discipline that not most companies don't have. It's typical of a Michael Chaney-led board. Michael Chaney, of course, was the CEO at Wesfarmers, which is a total value play and one that we very much like. So Woodside is a good stock to invest in because now, after the cave-in the oil price, assets are relatively cheap. Woodside's virtually negligible gearing, about 10% geared, gives them the opportunity and great balance sheet strength to be able to go and buy some assets on the cheap. So although production from existing assets may not improve in 2016-17, it's forecast to decline, I think Woodside will be able to find themselves a good acquisition in this environment, which will fill in the gap in the years that follow. And again, I'd say they're doing the right thing by shareholders in the way they preserve capital, and that's the kind of company I want to own.
All right, Gary.
I couldn't agree more with Hookie, actually. I mean, look, if you bought it here at sort of $34.50 recently, you would have just received a $1.84 dividend, which is a cracking dividend, really. So I think it's a buy here. I've got it in most of my portfolios. You know, if you have to own one resource stock, to me, this is the one you want to own, personally.
Yeah.
I do like the oil sector as well. I think there's a bit of value in there as well. So Origin, Santos Oil Search. So I think a lot of those stocks are down the lower end of the ranges here. I mean, you know, Woodside's probably the safest just because it's obviously got the most outstanding balance sheet of the group there. But if you want a bit of pure oil play, obviously Santos. Something a bit less risky, maybe Origin. The safest stock is obviously Woodside. So, you know, I've probably got a little bit of them all actually in the portfolio. So I really do like them all here.
Okay, we've got time for one more quick question before we go. It comes via email, and John writes, Spotless is benefiting from the fact that many government organisations are outsourcing their cleaning and catering to save costs. They are forecasting 25% profit growth for financial year 2015. Do you think the price is attractive? Well, 25% profit growth, wow. Is that too good to be true, Jeremy?
Yeah. I don't think it's really that attractive. No, I think, again, be careful. I'm not convinced they'll be able to deliver that sort of number, and I'm not convinced at the moment that the stock's cheap. I think it might still perform okay for the next little while. It might be worth holding it if you're in it. I'd be careful buying it, and I do think there's probably a time to sell it later in the year. You know, it might appreciate, you know, into the mid to high twos, and then I'd be on and finding something else in all likelihood.
Yeah.
So I don't think it's a high quality, high sustainable earnings stream.
This was, I mean, it's only been listed since May. So it was listed years ago.
Yeah, it was owned by private equity and they relisted it, Yeah, but I mean,
it's trading above the IPO price. Well, that's unusual for private equity, isn't it?
Yeah, again, question marks exist. Yeah, that's right. Yeah.
Sorry, Gary, I didn't mean to interrupt.
No, I was just sort of I remember obviously being in it years ago, so I was just thinking, I was curious seeing a short time frame on the chart there, so I'd sort of forgotten that it had gone off the board for a while. So, yeah, look, I think it's not a bad business here, but it does look a bit stretched here. I guess that's the only thing I can see here.
Yeah, time to take some profit or not get in these sorts of levels.
It does. It's not a big mover. That's the only thing. You're not really going to get big movements in the stock either way. So you probably can afford. You probably want to be patient here because you don't want to be probably buying a stock that doesn't move on the high end. You know, you want to be sort of waiting patiently for it to sort of come back in the range, I guess.
Yeah. All right, well, that's all we have time for today. Thank you so much to our guests, Gary Glover from TMS Capital and Jeremy Hook from TMS Capital. And to you, our viewers, for all of your calls and emails. Until next time, I'm Mark McCarthy from McCarthy Markets. Have a great night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program